everybody. Just tell me live when we're live. What's going on, everybody? Welcome to my latest live. This live's exciting. I got the agenda behind me. Let me do that quickly for those of you who are watching the recording, and then we'll kind of get into everything. So if you're watching the recording or the live, this is kind of made more for the recording after the fact. So if you're seeing this and you didn't watch it live, this is kind of made for that. But anyways, I'm going to do a pop quiz here in a minute. I'm going to introduce myself, going to do a giveaway, going to talk about the market, going to talk about tenants and the power of tenants. So many people are scared of tenants, or they think they're not going to get their property rented, or they don't know how to manage tenants. They think they're going to have to fix a toilet. Any of those things in the middle of the night, yeah, that doesn't happen. I'm going to give you some realistic perspective there and how our tenants are awesome and they make me a lot of money. And then we're going to do a Q&A. So we're going to do all that on this live. So if you're just joining the live, make sure to hit that like button if you have not. Follow me on all the social medias below me. That's where we're going to get cracking into. I'm going to introduce myself here in a couple seconds. So if you wouldn't mind liking and sharing this video. If you're watching the recording, again, just bear with a few of those interruptions. But overall, the general gist of this 25-30-minute live will be extremely valuable for you. I promise that. So we'll get ready to do the pop quiz. But again, join, share, like, all that kind of stuff, whether you're watching the live or the recording. I would appreciate you interacting in the comment section, as well as giving this video a like. So probably not a ton of people on quite yet, but let's just get the ball rolling. Let's rock through this. This is going to be a fun live. This is a little bit more direct of a live talking about tenants, but this is one of the most important things you can do. That's what we're talking about. So pop quiz. What is the most expensive thing? Eventually we'll get this live together where I'll have this like pop quiz pop up. But anyways, what is the most expensive thing about owning a rental property after you buy it and get it rented? So whether you do the BRRRR method or put 20% down on a retail rented property, what is the most expensive thing about owning rental property? A, utilities, B, the mortgage, C, insurance, or D, tenant turnover? Put your questions up. Probably A, insurance, 2, or B, the mortgage, 3, no crap, what was it? I don't remember. The answer is D. Tenant turnover is by far the most expensive thing. It's more expensive than your mortgage. It's more expensive than insurance. It's more expensive than maintenance. It's more expensive than pretty much everything. Let me explain why, or more costly. My tenants stay an average of 4 years. I'm going to explain why here in a second. But if every 10 years I have 2 tenant move outs, meaning they 4 years and then 4 years. So every 8 to 10 years I have 2 tenant moves out, and you have tenants move out every single year, every other year, my cash flow is literally going to be double yours, probably more than double. So over that 10-year period, I'm going to make twice as much money on cash flow than you are, because every time a tenant moves out, even if you're super efficient and they're an amazing tenant, it's going to be 30, 45, 60 days not rented. So you're not collecting rent. You still have to pay that insurance, those, maintenance to repair the things that they didn't repair, insurance, mortgage, all those things you still have to pay, but you don't have income coming in. And the more often that happens, the more likely the tenant's going to leave it looking bad and needing a ton of work. You can try to go after them, but you're never going to get the full amount. So, if you have 5 tenants in 10 years, it's a very high chance that one of them may cause $5,000 or $10,000 worth of damage, and you're not collecting rent when it's probably vacant for 4 months. However, if you have a tenant move out just once or twice in 10 years and they're great tenants and they stay longer, I'm going to get into those benefits. I'm going to, and you are going to cash flow way, way more. So it's not as sexy as here's how to find houses, here's how to find deals, here's a sexy pose. It's not as sexy as all that, but it's way more important. What I think is sexy, and I'm going to stop saying sexy after this analogy, but what I think is sexy is cash. So if you want cash and you want wealth, then this is an extremely important live for you to watch. Let me introduce myself now, then get to the giveaways. So that was the pop quiz. My name is Sam. I'm a real estate investor. I own a house buying company that is going to flip, meaning wholesale and fix, and flip about 300 houses this year. I also own a $40 million rental portfolio that I bought without using any of my own money. And today in this right over there, I shot my part of a corporate documentary. We were doing a documentary for PBS on Viewpoint Show with Dennis Quaid. Should be out in the next month or two. It's going to air for a year on PBS about real estate investing and the power of real estate investing and using it as an alternative investing method. So our brand is starting to branch out and get some national exposure, and I'm excited about that. So let's get the ball rocking. Here we go. So there's my intro. Giveaway. What I'm going to do in a giveaway, DM me on Instagram, and I will give you a free training. I just recorded it 2 days ago, just dropped it last night. A brand new free training about how to find, fund, and scale rental properties without using any of your own money in any market. LA, California, Hawaii, New York, Missouri, Texas, Kentucky, Indiana. I'm not going to name all 50 states, but you get the gist. You can do it in any market and any market cycle, up, down, in between, whatever it is. Really, really good free training. So check out the description below or DM me on Instagram. All right, on to the market chat before we get into the meat and bones of the actual presentation, the actual live talking about the tenants, and then Q&A. Q&As are fun. I did one last night. So anyways, so the market. Who thinks the market is going to crash? Again, if you haven't liked this video, please hit that like button. It just really helps me get this in front of more people. I'm going live here. Don't have to be doing this. I do it because I enjoy it and I like helping people. I'm not making really any money on this live, obviously. I'm just doing it to help and grow this brand. Obviously, this brand will make me money, but I'm just doing this to help that, and you just get the benefit of free information. So that like button would really be appreciated, whether you're watching the live or the recording. So who thinks the market's going to crash? Put it in the chat box. If you think it's going to crash, if you think it's going to go up, if you think it's going to go down, you think it's going to kind of soften, whatever you think the market's going to do. I'm not going to hold you to this. You're not signing, a legal document. Just curious what you think the market's going to do. If it's going to continue to go up, if it's going to soften, what do you think the market's going to do? And then I'll give you my thoughts. Dakota, do we have any a general feel for the chats? Most people pretty optimistic. Good. All right. Good. Well, I like that. So here is an extremely rough version of what the market benefits. Going to get the benefits of good tenants here in a second. So here's kind of a pretty rough idea what the market's done since 2000. The market has kind of, gone up, down, obviously the spike, big drop, a little bit of up, then the drop again, the bottom, and then it's kind of been working its way past up, then a little bit of dip, and then bam. Here we are today. So that's in a nutshell. It's a big nutshell, Dakota. That's a big-ass nutshell. But anyways, in a nutshell, that's what the market has done in the past 22 years. So here's my prediction of what it's going to do in the next couple of years. I think, let's go back. I think it is going to, let's get a green. I think it's going to level off this year, and I think we're going to see a little bit of a dip. And then I think it's kind of going to go up, down, and then slowly kind of work its way back up. So that's what I think is going to happen over the next 2 or 3 years. I get the scale's not right. That's 20 years, that's 2. But in general, I think we're going to see some turmoil. I think we're going to see some softenings. But I think it's a great time to invest. If you bought at the peak of 2007 and you bought a good deal, like you bought a deal that cash flowed and you bought a deal that had equity and you just bought a really, really good solid deal and you managed it properly, you still own it today. Not every house or investment that people bought in 2005 and 2006 sunk them. I know so many people that had good deals in 2005, 6, and 7, kept them, and then doubled down and bought more in 8, 9, 10, and literally are centimillionaires now, which means they're worth over 100 million. So good deals are good deals in any market. If you bought it this time and then it crashed, you're like, oh no, oh no. As long as you manage the properly and it was a good deal, the banks aren't going to call the notes due. The banks don't want to own it. If you have insurance on it and you're paying the mortgage on it, banks don't care. The right banks don't care, and I promise you that. The banks that I deal with, literally the first thing one of the owners said to me was, we didn't call any mortgages that were paying due in 08, 9, 10, 11, 12. Not one that was paying. So those are the type of banks you want to work with because you're still going to get your property rented. Maybe you won't cash flow as much. Maybe you lost a little bit of value in it. But it doesn't matter because it's a long-term investment. This is not exact accurate, but it's pretty accurate. 2007 was the height. By 2010 or by 2012, so within like 4 or 5 years, you were already back to that, and then it's worth literally 30 to 40% more. Houses are going for 30, 40% more than they were at the last height. So you had to, stomach a downturn, but overall, real estate's going to go up. It's going to go down and up. You can't time every little downturn. You can't time every little dip to buy. You just buy it and you hold, and over the long run, it's going to be worth more. There is no 10-year period where real estate's worth less than it was before. So take 1990, 1980, 1970, 1960, whatever. Take a 10-year period. Look at the FRED, the real estate house value chart, historical accurate data. There's no 10-year period where it's dropped more than it is worth. So like if you bought in the very, very height of 2007, within 10 years, it was worth way more than it was when you bought it. If you bought in the dip of 2011, then obviously it was worth more. So there's no 10-year period where it has ever, ever, ever been worth less than it is when you buy it. So just think of it that way. All right, so that's a little bit about the market. Hopefully you agree or disagree. Let's talk about tenants. So the benefits of having a good tenant are ginormous. Obviously the cash flow is going to go up, but having good tenants do so many things. Let's pay attention to this part. I know, again, I promised and I just lied to you. So because I lied, hit that like button. I wasn't going to say the word sexy again. I am. I know it's not sexy to talk about tenants, but oh my gosh, it is freaking important, and it's going to put more money in your pocket. If you like money in the old pocket, then you are going, I think I just flashed my underwear, but anyways, and then you are going to, you're going to want to pay attention. If you like money and wealth, you're going to want to pay attention to the benefits of good tenants, because it's going to put more cash in your pocket. So the benefits of good tenant, aside from the overall arch of more money in your pocket and more wealth created, less headaches. Getting good tenants in place is going to require, or is going to give you less headaches, less issues, less calls, less texts, less whatever it is, even if you're managing yourself or hire it out, which is obviously an option. You don't ever have to talk to a tenant if you don't want. But also, you're going to have less maintenance, which is going to put more cash in your pocket. So they're going to take care of their part of the property. You're going to take care of yours. They're not going to call you for every little thing. They're going to have some pride and ownership if you do as well. And you're not going to have as much maintenance. So that's less money out of pocket. They're going to pay you on time more. You're going to communicate and have good tenants and get more payment options. You're not going to have to be chasing money. So you're not going to be chasing money. You're going to have less in maintenance. You're going to cash flow more. You're going to have less headaches. You're going to have less turnover. Everything works smoother with good tenants. All right. So having good tenants is extremely valuable to the top line, the bottom line, the middle line, the cross line, whatever line you want to talk about. Having good tenants is a huge, huge benefit that will put more money in your pocket. So let's talk about, how do you get good tenants? I hear all the time people saying and stating and, just making comments, what if I can't get a tenant in place? Or what if I, can't get a tenant in place? Or what if the tenant ruins the house? Well, you have control over that, because you have control over the tenant criteria, and you can set yourself up for failure, or you can set yourself up for success with how you screen your tenants and how thorough you are. Now, obviously you can hire this out, but if you want to do it yourself, let's talk about some things that you can do to make sure that you're getting good tenants. So obviously being a little bit more strict in your initial criteria. So not going to get into all the technicalities, but you have to treat all tenants the same. You can't treat one tenant different or one prospective tenant different. No matter their age, race, color, anything, you have to treat them all the same, which is what you should do anyway. So as long as you do what you should do, it's pretty simple. You can't make exceptions for certain tenants or certain properties that you don't. So that's kind of, let's get that out there. Don't do that. So, treat them all the same and treat them fair, but have strict criteria that you stick to. Have a credit score limit that you stick to. Have a, income that you stick to. Like we make our tenants have 3 times their net income for rent. So let's just say the rent is $1,000 a month. Rent is $1,000 a month. They have to make at least $3,000 of net income every single month. That is to set you and them up for success. You might have an amazing tenant that makes twice as much money as the rent. You think that's enough? That's a recipe for failure for you and them. They need to make more money. They need to have disposable income for if things happen to them, if they need to get a new vehicle, if they need a repair in their vehicle, if they want to go on vacation, they need to have extra money aside from rent. So at least 3 times net income is what we do for the rent. So that's one of the first things. We have a minimum credit score. We have, we look at they send us their bank statements. We look through their bank statements to see their spending habits. We run an eviction check to see if they've been evicted in the past 5 years. If it's eviction from 10 years ago, to have a good story, we're fine with it. It was eviction last year, that cancels them out, and we can do that as long as we do that for everybody, which is what we do. And then also they need to have like a decent criminal history. Okay, DUI a few years ago, traffic violations, whatever, that, we're not going to turn that down. A violent crime or domestic abuse or something, we are going to turn that person down. We want to set us and them up for success. There's plenty of landlords out there that will take those kind of people. Those are landlords you do not want to be. There's nothing wrong with people that are in those situations. They're just not cut out for our properties. It is what it is. There are way, way, way more good tenants out there than good landlords. So if you're going to be a good landlord, you're going to have your pick of the litter of good tenants. May not seem that way, but I promise you it will be that way. People always have to live somewhere. So if you're a good tenant, or if you're a good landlord that respects your tenants and communicates with them, you're going to be just fine. If you have pride in ownership, you're going to be just fine. We also like to market our houses like 10% less than market rent. Yes, we could collect a little bit more money, but if your tenant gets a little bit of a deal, they're going to stay longer and you're going to avoid those turnovers. If they feel like they're getting a good deal, they're going to take care of the property better. They're going to pay on time. All these things that add up to way more than 10% of that rent a month, or 10% less than market, are going to add up in my opinion. So doing that, even if it takes us 2 months to find a tenant and that vacancy of that first 2 months is, out of pocket, if we wait 2 months and prove a killer tenant, I'm confident they're going to stay for 4 or 5 years or longer, and then we're going to cash flow double or triple just because we waited that extra 2 months. If you approve anybody that kind of just fogs a mirror, not ideal. Don't know that that's the right route for you. So that's kind of some tenant criteria things that we go into. I just want to hammer home the importance of good tenants. I'm going to kind of not wrap this video up, so don't go anywhere. Hit that like button if you haven't. Share this. DM me on Instagram if you want my free training. Follow me on the socials. But throw some questions in the chat box about tenants, about real estate, about investing, about wholesaling, about flipping, about buying rentals with none of your own money, about the BRRRR method, about financial freedom, whatever you want. Throw those questions in the chat box as I'm kind of wrapping up this portion of the video. So just fill that chat box up with questions and I will get to as many as I can. Q&As are super, super valuable because you may not know a question to ask, but if you hang around and listen to other people's question, that may spur a question. Or someone may just ask something that you don't even know is a question and you might be like, holy crap, I didn't even think of that. Glad he answered that. So anyways, do that while I'm chatting here. So having a good tenant is literally going to double, triple, quadruple your cash flow over the long haul. And holding rental properties is a long-term investment. If you think you're going to get your money back in a couple of years, or you think you're going to get wealthy off of one rental, you're wrong. Have a long-term plan. If you need active income, rentals maybe aren't your best plan. Wholesale or fix and flip, we talk about those if you want, but then do rentals for the long-term wealth gain. So let's get to some questions, and then we can, if we don't have a ton, I can spitball and talk about a few different things. So any questions that in the chat box for me, D-Money?
Yeah. What qualities do you look for in a duplex before buying?
What qualities do you look for in a duplex before buying it? So great question. It really kind of depends on a couple things. So 2 scenarios. One, you have money and you want to put 20% down on it and that's it, and you don't want to do anything to it. I'm going to look for a duplex in a really nice place in really good condition that not going to need a ton of maintenance, that I should be able to get rented quickly. So look at other duplexes in the area, what they're renting for, how quickly they rent, look at the condition of everything, make sure your houses or your duplexes is nice or nicer than anything out there, and then I'm going to charge a little less than market rent. So just kind of look for those, it's got solid bones, it's in good shape, everything's been replaced, or everything that's not been replaced is in good condition. You don't want to have a maintenance issue if you're doing that 20% down. If you're doing the BRRRR method and you're going to buy it, fix it up, and not use any of your own money, I can go over the BRRRR method on the board if you would like. That's kind of my token thing that I go over, but we can if you'd like. You can buy that duplex without using any of your own money with the BRRRR method. So then I'm going to look for a discounted property that's distressed, that I can quickly and realistically add value to by fixing it up and touching every little area of it so that I know that what's behind everything, and so I know that there's not going to be maintenance, and I replaced everything on the repair, on the initial rehab, so I'm not going to have to come out of pocket with that later because it's going to get reimbursed to me on the refinance part of the BRRRR method. So look for a little more upside there, and then you might be able to get even a little closer to market if you want, or above market if that's your game plan, if you have a brand new freshly rehabbed property. And if you're doing the old house hack, live in one side, rent out the other, just make sure to buy something where you don't mind living in for a couple of years. So great question. What else we got?
What do you require for move-in? Deposit, first month, last month, security, etc.?
Great question. What do you require for move-ins? Security deposits, first month, last month, all that. So what we require for a move-in is obviously, the credit check, all that stuff, but assuming they pass all that, we require the first month's, or we don't call first month rent or deposit, we require their deposit. And we usually make their deposit maybe $50 more than their rent, because you'd be surprised at how many tenants don't pay attention and they pay you that deposit and then they move out and they say, no, that wasn't a deposit, that was my first month's rent. So, they say, I didn't know I had a deposit. So we make it clear that it's a deposit. We charge a little bit more, nothing crazy, $50 more than rent. So they can see and notice, no, we charge you a little bit more because that's the deposit. So that's kind of a communication thing we do with them. And we don't require, last month's rent. We require first month's rent before they move in, the beginning, whenever they're moving in, just like every single, if a tenant moves in on the first, the next month they have to pay for that month. So they pay in advance, not in arrears. So a tenant pays before they live that month. They pay before. So we require, the deposit and then the first month's rent, right before they move in. We don't have to have that forever. So before they move in, we need that deposit to clear, and then we need that first month's rent to clear. We don't ask for last month's rent. Just not something we do. We don't want to be too much of a burden, cash outlay for them. We want it to work for both of us.
What qualities do you look for in a duplex before buying? More specifically, location, NOI, cap rate.
So what qualities do you look at for a duplex, more specific for like location? So everybody's different. So I don't even own any duplexes. No, I own 265 rental units, but no duplexes. What I would look for is similar to the houses. So duplexes are not valued on cap rates. Like, I understand cap rate is a good reference point for cash flow, but it's not a reference point for value. Duplexes, triplexes, fourplexes. So 1, 2, 3, and 4 families are based on the similar properties around them. Apartment complexes are what are based off of cap rate. If you're looking for a value, then apartment complexes are going to be the cap rate. So 5 units or more. How much income, basically the cap rate is a value based on the income the property produces. If it produces X amount of income, it's worth this much. If it produces this much, it's worth this much. That's how multifamilies are valued, 5 units and over. 1 to 4 units are valued on comparable house sales. So your house, your duplex, your triplex, your fourplex are based on what a similar property has sold for in that area. They're market based on recent house or duplex sales. So your cap rate's fine to use for cash flow, but it has nothing to do with value. Like, people run cap rates on single family rentals, that's fine. That's, what you're getting for the cash flow compared to what the property brings in and your expenses, but it has nothing to do with the value of the property. So it kind of answered it, didn't. Everybody looks for something different. If you're wanting just cash flow, you're going to find a rougher area that has higher cash flow with low, that's just not going to appreciate as much, but you can find a really nice area with a duplex that's not going to cash flow as much, but it's going to go up in value a 10. So it just depends what you want. Love this. Best strategy on finding good contractors. Finding good contractors has never been tougher, honestly. I think it's going to start to get easier in the next year or two, but it's never been tougher right now. So what you do is you talk to other investors that are actively investing. You'll find them on the Facebook groups and meetups, or you meet them. Every single meetup that we host, we have investors there, and somebody always asks me, how do I find a good roofer? How do I find a good, flooring guy? How do I find, a good painter? Well, there's a good flooring guy. I'm going to point out the people in the room that I use. That's just people work for us, but they work for other people too. That's just I want to help out those contractors by giving them more work and let them know I referred people, so they continue to do good work for me and prioritize me. You can start to do that as well, but also other people have that same mindset, other investors. So talk to other investors. They're going to point out the good contractors. So you're going to find them from other investors at your local meetups, on your local Facebook groups, and then also just from other contractors. So usually a good roofer knows a good siding guy if they don't do it themselves. A siding guy knows a good window guy. A window, gal knows a good flooring, and flooring knows painter. Painter knows finished carpentry. They all kind of know each other, the good ones that work with investors. So you got to treat them great. If you treat your roof guy like crap, he's not going to give you his good references. So treat them fairly, and they will start to reference you around. Anything else? No, I think we're good. Let's wrap that up. Thanks for being here. Make sure to like, subscribe, follow me on TikTok, YouTube, Instagram, Facebook, Twitter, @SamFasterFreedom. See you next week.